Hi, it's Samantha Brookes and welcome to Samantha TV, the place to be to build wealth on your road to financial freedom. As some of you may know, the Minister of Finance made an announcement that affected many Canadians in the housing industry. As of October 17th, new rules and regulations were implemented to ensure that Canadian borrowers only take on mortgages they can afford. Also, the new rules enforce that all insured borrowers qualify for loans based on the posted 5-year mortgage rate. With this announcement, many homeowners, lenders, and realtors have been scrambling to figure out what the impact would be for themselves as well as future home buyers. I'm a Huffington Post blog. We've been receiving many questions from concerned Canadians as well. So I wanted to make a video to address some of those concerns. So here we go. This question comes from Paula Veneri, and she writes, "Hello Samantha, I noticed you mentioned higher interest rates. Paula has recently talked about lowering rates, and most predictions are for long periods of low interest rates due to global anemic growth and of course the slowing oil sector and sluggish Canadian economy. When do you see rates rising here in Canada? From what I've read, I think not earlier than 2017. Do you see an earlier rate hike? Thanks." It's difficult to predict when the rates will be increasing. They have been low for quite some time, and my guess is the government will have to measure the impact of these current policy changes on the economy before taking that step. If I were to predict when the Bank of Canada would increase rates, it would be at least a year or two before anything is done. One thing we have to keep in mind and remember is that banks have the right to increase rates regardless if the Bank of Canada increases their rates. My prediction on the banks increasing their rates is prior to 2017 due to newer, higher funding costs. The Bank of Canada's rate only affects the variable rate, which is expected to remain unchanged for the time being. If current homeowners are going through the refinance process, they too will have to go through the new stress test to requalify. If they do not qualify and need to refinance, then they would have to find a mortgage broker who could assist them to secure a new mortgage with an alternative lender. Alternative lenders have higher interest rates and charge a lender's fee to complete a transaction. There is also a broker fee when an alternative lender is used, as they do not get paid the same compensation with an alternative lender as they do with a bank. Paula, that's my answer to your question. Thank you so much for your message. Overall, if you're looking to get into the market, just remember to protect yourself by getting a pre-approval that takes into account the new stress test rules. Also, it's important to note that your maximum amortization period is 25 years, so you'll need to factor that into your next home purchase. For additional information, contact a local mortgage broker for assistance. Now, do you still have additional questions about the new mortgage rules? If so, leave your comments below to join the conversation. If you enjoyed this video, then subscribe to our YouTube channel to stay up to date on our latest posts. And if you know someone who would benefit from this message, then we invite you to share this video with them. I want to thank you for watching this episode of Samantha TV, and until next time, choose kindness and laugh often.